Moving on to the disbursements of the Road and Street Finance Report, starting on page 2. The biggest change we made for the disbursements this year is in the top 3 sections for new construction, rehabilitation, and routine maintenance. We have changed what we're requesting in each of the lines of the category. So we are now requesting in each section and each line of each category, you include your salaries and wages for the work that is performed on each of those lines. So under new construction on line 25, if you have a new roadway that you've put in, so this would be new lanes of traffic or a new street that wasn't there before, you would not only include the cost for the construction, the materials, but you would also include the salaries and benefits of the workers who actually worked to create or build that roadway. On line 26, we're asking for the same thing with your bridges, culverts, and storm drains. So again, any new bridges, culverts, or storm drains that are created, including the materials, the cost of the construction, your salaries and benefits for the workers doing the actual work. Line 27 is for railroad crossings. So what the construction costs, including equipment, materials, labors, and benefits. And then line 28, any other costs. And we updated this line to include signs, signals, or traffic control. We weren't capturing those costs anywhere before, and we feel like capturing them in that other line is important so we understand how much is being spent on signing every year. Line 29, you just total your new construction costs for that year. In the second section, reconstruction, replacement, rehabilitation, again, we are asking for the salaries and benefits on each line. So on line 30, any roads that you've rebuilt, realigned, or done an overlay on, you'll include the materials, the cost of the equipment, and the salaries and benefits to do the work. Line 31 is for your bridges, culverts, and storm drains. Line 32 for your railroad crossing. And line 33 for all other. So this includes your signs, signals, traffic control, and any reconstruction or rehabilitation you might do on this. And then line 34, you're going to want to make sure you total just the reconstruction, replacement, rehabilitation section. Moving on to the routine maintenance, starting with line 35. Line 35 is for your chip sealing and your seal coating. So the cost for your equipment, your maintenance, and all of your benefits and labor for this line item. Line 36 is for the patching that's done. So any patching of asphalt, gravel, concrete roadways, bridge surfaces, any equipment, materials, labor, and benefits will be included on line 36. On line 37, we have updated the name to be winter maintenance. It used to just say snow removal. We want to make sure on line 37 that we're capturing all costs for winter maintenance, not just removing snow, but any other materials you may purchase, such as mag chloride, sand, anything else that you might include in that winter maintenance line. On line 38, we're looking for your cost of grading and blading for the year. So again, make sure you include any of your salaries and benefits because that's probably the largest cost for your grading and blading. Line 39 is any routine maintenance you do on bridges. This could be simply painting or fixing the deck of a bridge, but make sure that you're including your benefits and salaries on this line. Line 40 is for all other maintenance. So again, we're asking for the signs, signals, traffic control that you might do any routine maintenance on. It may be simply fixing the post of a sign. We want to make sure you're capturing the cost for that on line 40. And then line 41 is your total routine maintenance cost for the year. On the equipment section, again, we want you to include your salary and benefits on each line. So on line 42, we're looking for any equipment purchases you have done in the year. This could include a heavy piece of equipment, a truck, a pickup, or any other type of equipment you're using. Line 43, we did change the name on this line, and it says equipment lease to purchase. So in a lot of cases, we see local jurisdictions who are leasing a piece of equipment to purchase it over in a period of time. So make sure you include what those payments are and the cost of that for each year on line 43. On line 44, we're looking for your equipment maintenance. So the cost of maintaining your vehicles, the equipment, including the fuel, oil, tires, batteries, miscellaneous parts, your mechanics' time, and their labor and benefits would be included if you have a mechanic on staff on line 44. Line 45 is any other expenditures you might have for equipment that do not fall into one of the other categories. And then line 46, again, is just the total for that equipment. On line 47, administrative salaries and expenses, we are looking for the cost for your administrative operations. So this might include some administrative staff, the office costs, any insurance, maybe some building maintenance, utilities, salaries, other items that we haven't listed that don't fall into any other category. A lot of times it's going to be clerical staff along with your buildings and your utilities, just the cost to operate a shop. So you're going to list everything in line 47 for any administrative costs. Under the other expenditures, we have on line 48, the right-of-way and property purchase. So the cost of acquiring your right-of-way property purchase, including the appraisal and the negotiation for that purchase. On line 49, property leases, it's going to be the cost of any leasing that you pay for land and buildings, including if you pay a lease for your gravel storage. Line 50 will be your street lighting, so the cost of any street lighting that you do. And then line 51, professional services, which might include your audit, your clerical services, or any legal fees that you pay in a year. Line 52 under professional services, we're asking for engineering. So the cost of what you have paid to an engineering consultant during the year to do any work for you. It could include designing something, doing some inspection, maybe some surveying, or even updating a transportation plan. Any cost that you have incurred and paid to an engineering firm in a year, you will list on line 52. Line 53, your interest on your bond, including your LIDs. So any interest on bonds, local improvement district bonds that you have paid out, you will list on line 53. And then on line 54, any interest on notes, including your loans. So this could be a short-term note or a loan that you're paying interest on. Line 55, the redemption of your bond, including your LIDs. So this is going to be any principal payments you've made on any bonds, including your LID bonds. On line 56, your redemption of your notes, including your loans. So this will include any of the payments you've made on any notes or loans in the year. Line 57 will be payments to other local governments. So this will include any payments from your jurisdiction to any other local governments. You're not going to include routine maintenance, construction work that should be reported in the appropriate line above. If you pay another jurisdiction to do work on your roadways, you will be reporting the information up in the appropriate category. If they did routine maintenance for you, you will list that payment in the appropriate category. But there is a chance you have an agreement that that jurisdiction may report that information for you. So make sure you understand who is reporting the work and who is reporting the payment and who's reporting the revenue on both of those sides, so we're not duplicating that expenditure in this report. On line 58, we're going to look for any fund transfers to non-highway accounts. So this would be any money you transfer any year to a non-highway account, which could include a general fund. During the year, you might transfer money in from a general fund to cover snow removal, but you may pay it back later in the year. So you would just simply list that payment on line 58. On line 59, you're just going to total all of your, line 59 is going to be your other local expenditures, and line 60 will be your total of your other expenditures in this section. The bottom of page 2, we will look at line 61 through 67. On line 61, it's simply going to add up your total disbursements, and then on line 62, it will look at your receipt over your disbursements. So it will take your total from line 24 on page 1, subtract out your total disbursements from line 61, and give you what that number is. On line 63, if you have any other adjustments, sometimes there's an audit adjustment or another correction, please list it on line 63. And if you do put a correction, please write an explanation on the line or attach an explanation to the back of the sheet. Line 64 will then give you your closing balance. So it will look at what you had for your beginning balance, add it to what was your receipts over your disbursements for this year, and any other adjustments from line 63. You can have 0 on this line, but you cannot have a negative. If you have a negative, you need to go back and look and make sure your beginning balance from the prior year was correct and that you're reporting all your receipts and all your disbursements. It may be that you need to show money coming in from the general fund, but it's important on line 64 you do not have a negative number. On line 65, you're going to list any of the funds that are remaining on line 64 that you have obligated for specific future projects and reserves. So this could include money you have specifically set aside for large projects in the next year, or if you're reserving those funds to purchase a large piece of equipment or purchase a building. So you want to make sure line 65 that you're including everything you can that you have set money aside from line 64. On page 3, there is actually room to list those items from line 65. On line 66, you're going to, again, look at what is remaining in line 64 and list of that money what is retained for general funds and operations. Typically, jurisdictions have a number of months, a percentage of their revenue, or a number that they have to have in reserves. So make sure you list on line 66 how much you're carrying over for your future street and bridge department costs. And then on line 67, you're going to get an ending balance, so it will take your line 64 closing balance, subtract out line 65 and 66, and give you that ending balance that you will use.